Welcome back to the Dividend Diplomats YouTube channel. You've got Bert, the Hurt, you know you're rolling with Lanny, the Dividend Diplomats, and we're here to bring you the dividend stock watch list heading in to November 2021, baby.
Before we jump in though, smash that subscribe channel to follow the Dividend Diplomat so you can get notifications every time we release a new video. And on top of that, give this video a thumbs up if you are happy with the 3 stocks that are about to be on the watch list. And even if you just enjoy hearing us, we would appreciate the notifications and the likes too. So thanks everybody. Let's get pumped. Now Lanny, let's jump in.
We're jumping in dividend stocks right now. We're trying to add dividend growth stocks to our stock portfolios.
We want that passive income to grow to cover our expenses so one day we can achieve financial freedom.
You know, the stock market has been wild. They just set a new record, Bert. Over 4,600 in the S&P 500, brother.
I was getting really excited a few weeks ago when we were like, hey, it's going backwards. It's in the 4,300s. We might have a small pullback. Get ready to deploy that capital. Then the stock market said, hey, everyone, we were just kidding. Let's shoot right back up to set new highs.
Exactly. So they set new highs, finished over 4,600 for the first time on Friday, October 29th. Everything has been just green in the market. I mean, you've got a bunch of things happening right now. I mean, inflation is soaring right now. I mean, you know, at the price of, gas, the price of materials.
Food costs are jumping up there too. Those grocery bills are higher. That's what's kind of crazy, at least as I see the market jumping up. The inflation costs are real, and you can really see them hitting your credit card statements in your bank account.
You know, and then at the same time, we all know that the cryptocurrency market is just going ballistic right now. Bitcoin well over 60,000. I think Ethereum set new record highs as well.
Yeah, so you're getting new records on 2 fronts here, and there's a lot of exciting, interesting things happening in the market. It'll be funny to see what's going to be happening with crypto here, especially as the regulatory bodies try to catch up to it. But you also see some other companies beginning to, especially in the banking sector and the financial services, start to incorporate Bitcoin and other coins into their regular services.
But you're here to buy dividend stocks as one of your best assets to produce passive income on that journey to financial freedom. So we're here to talk about 3 dividend stocks to buy right here, right now. It's all about stacking dividends, building up that cash flow, and that's what we're here to do, Bert. And, we want to go through how we obviously find these dividend stocks.
Oh, there's just some small thing called the Dividend Diplomats Dividend Stock Screener, which features 3 metrics and 1 bonus metric. Price to earnings ratio less than the S&P 500, which is at about 28 right now. It's in the mid to high 20s pretty consistently. Payout ratio of less than 60%. We think a perfect payout ratio is 40 to 60%. 3, history of increasing dividends, where you look at the dividend growth rate and how long a company has increased its dividends. And lastly, that bonus metric, the dividend yield. So Lanny, I know you were hard at work finding these 3 undervalued stocks to buy. Let's jump right in. Who's number 1?
For the blood, the sweat
and the tears.
And they say, to be the man, you got to beat the man. Woo! So we're going into these 3 dividend stocks right now. We're going to kick it off with stock number 1. We're heading into the real estate investment trust arena, the REIT, as we all like to call it, STOR Capital, ticker symbol STOR. And what is STOR Capital? Well, they're a massive, REIT, really in the, as their acronym is, the single tenant operating real estate company, or STOR, for lack of a better way.
Yeah, and what's cool about STOR is obviously the type of properties they own, but some of their investors too are some of the best dividend investors out there. Some old guy named Warren Buffett has a pretty decent stake in STOR. I think what, Lanny, you found it 10% of STOR shares are held by Warren Buffett?
Yeah, back in 2017, because STOR went public back in 2014. Warren Buffett dumped almost $400 million into STOR Capital, owning at that time almost 10% of all shares outstanding. Warren Buffett, I'm coming for you. I'm going to the store to possibly buy some STOR stock.
That's hilarious too. And remember, before we jump into the metrics, REITs use AFFO, or funds from operations, instead of earnings per share. REITs are required to pay out over 90% of their earnings. So the industry metric, it's a non-GAAP metric for all of you accountants out there, but the industry practice is funds from operations. That's what you truly use. So let's jump right in, Lanny. Do you want to talk about STOR's price per AFFO ratio?
All right, so going to that first metric on this dividend stock to buy right now. STOR right now is trading at $34.33. When I was peeling back through that second quarter earnings release, their adjusted funds from operations, or AFFO, for this big REIT, real estate investment trust, actually calculated out to 97 cents per share, and that's on a 6 months basis. Annualize that out, got to the $1.94 on the AFFO. Doing the math, the ratio is just about 18.
Not bad. Hey, a bit lower than the market right now. I'm sure you'd find some other cheaper stocks out there, but we look for quality too. We're not just looking for the cheapest. We just want to make sure it's undervalued compared to the market. That's true. So very nice. Let's move into that payout ratio. So they pay a quarterly dividend of 38.5 cents. So annualize that to $1.54. So you take that dividend divided by the AFFO that Lanny talked about. That gives you a dividend payout ratio of 79%, which very nice for the REIT sector.
In the REIT sector, yeah, it means there's a little bit of growth room there for STOR capital. Again, as Bert said earlier, REITs typically are at that 90% of a payout because they flow it back through their investors, because you're obviously taxed at the ordinary income rate for REITs. Going to that third dividend stock metric, dividend growth. This is what you're here for. You want that passive income stream to grow without you having to do anything. Obviously, you can own physical real estate and increase your rent on your tenants. Well, STOR Capital, owning this REIT, they're doing just the same, except they're passing those rent increases on to you, the shareholders. So they've been increasing their dividend every year, Bert. Do you want to dive in a little bit to what that average growth rate looks like?
Yeah, their average dividend growth rate is 6%, which is very strong, very solid, especially when we're going to go into that bonus metric, and you'll see that dividend growth factor there. So you said they've grown it every year, so obviously they haven't been public for 25 years, so they can't have that dividend aristocrat title. It's encouraging, though, that they've increased it every year since they're public. Buffett owns them, so they're going to be focused on dividend growth. And they have
Buffett.
Yeah, it's a lot of dividend investors do. It's a good person to follow and learn from. And then the average dividend growth rate, 6%, very solid.
In their last dividend increase from STOR Capital, they increased their dividend this year at about 7%.
So let's jump into that bonus metric. The dividend yield, currently they are yielding 4.5%. Not the highest for the REIT, not the lowest, but it's very consistent. It's nice to see very strong payout ratio for the REIT sector. 4.5% yield and a 6% dividend growth rate. That puts the dividend factor over 10%.
Over 10%.
And that's what you look for.
I always try to look for that good combination. Obviously when you compare them to, one of the best REITs out there, Realty Income, STOR Capital's yield and growth rate as of right now is higher. Realty Income has that long-term history, though.
Yeah, excellent point, and that's what you hope STOR can aspire to, especially since they're starting to show signs of strong dividend history. I see why they're on your watch list. You've been buying them too recently, right?
I've been adding shares to this dividend stock. I've been buying them, over the last probably month or so. I have about 57 shares of STOR Capital. You'll see it in the blog article, but I wouldn't mind getting to a nice 100 shares, a nice solid 100 with STOR Capital. That was dividend stock to buy number one.
Let's see if you can make it happen. Moving to, we are switching gears entirely. We are moving into the...
Literally gears.
Oh, I like what you did there. Number two is Cummins, ticker symbol CMI.
Yes.
You've been watching this stock closely over the last few weeks, haven't you,
we
Lanny?
put out a video on them. We've both been watching Cummins. They've kind of hung around that share price, give or take a few dollars, near the $240 share price mark. They're a pretty boring, but boring is sexy stock here.
For us dividend investors, boring is very sexy.
Very sexy. This is a great dividend stock to buy and probably own for life. They're actually doing very well in the dividend growth arena. They're involved in manufacturing and distributing engines. Really, you've probably seen their trucks on the highway. Cummins, boring dividend stock, but as Bert said, boring can be very good.
And one thing you pointed out in the article is over the last month, Cummins is up 6.8%, almost tied directly to when we released that video. They've been up since then.
Oh, interesting.
But what I'm excited for is, okay, so the stock has been up nearly 7%. Let's jump into the metrics, though, because I'm curious. Let's see just how undervalued they are if being up 7%, they still found a way to make it to your watch list.
Their will to win. No, but let's diving into the first dividend stock metric, the price to earnings ratio. Again, Cummins is trading at $239.84. as of the end of October. Forward analysts, and I'm using just the 2021, even though 2022 is out there. 2021 is lower, so we're using that to be conservative. The $15.94 are the EPS expectations. Therefore, the PE is about 10.
Excellent. Still signs of undervaluation, even if it jumps up. Let's move into the payout ratio. Their quarterly dividend is $1.45 for an annual dividend of $5.80. Divide that by the $15.94. Dividend payout ratio is below our perfect payout ratio range. It's only 36%. Boom. Love it.
That is screams safety to the dividend. Probably could expect dividend increases going forward. You owning this stock, again, boring, but you know that they're consistent.
Let's move into the third metric. They've increased that dividend for 15 consecutive years. They are a decade away from earning that coveted dividend aristocrat title. With that low payout ratio, you don't see a reason why they might not get there.
Hey, maybe they'll get acquired by 3M or something.
Maybe. Let's hope not, because then we'll see that dividend growth plummet, because we're watching 3M. February 2022, we better have something
Bird's
sweet.
after you. Bird is ready to just lay it, the smack it down on your, you know what.
Yep, so they've increased for 15 years, and their last 5-year average dividend growth rate is 6.87%. Very solid. Another great dividend growth rate.
That last dividend increase that you received from this dividend stock was 7.41%. So definitely higher than that average dividend growth rate.
Yeah, so again, I can see why it earned a spot. Let's check out that dividend yield. Their dividend yield fluctuates right now in the 2.4 to 2.5%, so you're getting a nice premium to the stock market by about 1%, as the stock market yields usually between 1.3 and 1.5. So you take that 2.4% yield, add in 6.87. Yeah, nice factor too, just below 10.
Just below 10 on the overall dividend factor. I own 31 shares of Cummins stock. I wouldn't mind getting to the big 50 shares of Cummins stock, but you'll see, based on the metrics, great dividend stock to buy, one that you can consider adding to your portfolio, and one where the passive income stream just continues to grow at that 6 to 8% clip.
Let's move into dividend stock number 3.
You gotta kick this one off.
We're going down 71 to Columbus, Ohio. One of my favorite holdings I have in my portfolio. They're one of my original dividend growth stocks.
Loves this stock.
I do. I bought it, set it, forget it, and it has crushed it. The dividend continues to grow. That is the definition of what we are trying to achieve here for our portfolios. Dividend stock 3 on Lanny's watch list is AEP, ticker symbol AEP for Rob Van Dam.
So they're a great utility company down in Columbus. They're probably one of the most consistent utility companies that I've seen. I know everybody loves Duke. I know there's, a few others out there, Con Ed. I'm not going to keep going down the list. But, to be honest, AEP is actually down on a 52-week basis, based on October/November of last year. They're up this past month, probably subsequent to that dividend increase that they announced, but we'll get into that in a second. Bert, do you want to hit them with the sweet chin music on the 3 dividend stock metrics?
Yeah, so they traded at 84.71. Divide that by the 468. That gives you a PE ratio of 18.1. Still undervalued compared to the market, which is in the 28 to 29 range. Just jump right into the payout ratio here. Their annual dividend after that dividend increase, which Lanny will talk about here in a second, is $3.12. That gives you a payout ratio of 67%. Slightly higher than our 60%, but also very low for the utility sector, which typically has higher dividend payout ratios.
The one thing, going back to the PE ratio, they're slightly just a little bit higher than Con Ed, ticker symbol ED, whom is a dividend aristocrat. So we always like to compare them to some of the competition. So being at 18 PE, they're pretty much fairly valued against the competition. Yeah. But what was that payout ratio again?
67%.
Okay, how do you feel about that?
As I said, it's lower than the utility sector as a whole. It's on the lower end, slightly higher. Not overall concerned about the safety. Let's move into that third metric, the dividend growth. They've increased that dividend for 11 years. 5-year average dividend growth rate was 5.74%. Lanny, was that last dividend increase in line with their 5-year history?
Actually, their dividend increase was 5.4%, so almost like right in line with that 5-year average at 5.74.
It's consistent. It's exactly what you want to see from a utility company.
Right. Now, that dividend yield on AEP is 3.68%, not the highest, not the lowest, but what you're getting is a solid dividend yield and a very consistent, mid to upper single digits on the dividend growth rate. That's why they're on this watch list. They crossed over the 9 dividend factor when you add the yield and the growth.
Perfect. So to summarize, Laney's got 3 fantastic dividend growth stocks on his watch list. 1, STOR Capital. 2,
Cummins, baby.
Yeah, there it is, Cummins. And 3, AEP. Laney, here's the question everybody wants to know. Rank them. 1, 2, 3 from this watch list.
1, 2. Oh, it kicks out. No, the first company on this list that I'm interested still in is STOR Capital, STOR. To me, it's giving you more of that exposure to the real estate. I have realty income already. I do invest with Fundrise, but this gives you a little bit more of an exposure in the REIT industry, something that I don't have as much of, especially in the taxable account. And then next, I would say, is probably Cummins. I'd like to see that position grow. AEP really is on my watch list because I don't really have much in that electric utility, natural gas industry.
It's interesting from a dividend investor perspective. So just to summarize, STOR, Cummins, AEP, 1, 2, 3 on your list.
Yep.
Everybody, let us know your thoughts on these 3 companies. Were you shocked to not see Lockheed Martin or Intel on this list? I was coming into it, but it's exciting to find 3 other potential undervalued dividend stocks to buy.
I mean, I know Bert's been buying a lot of Lockheed Martin, buying a lot of Intel stock on their price drops. He's really building up that solid position in that stock portfolio. Those are great companies. Here are 3 others that you probably don't hear about in the news often, or if at all.
But you can see why you add them once we start peeling back and looking at the numbers and looking at the metrics. So let us know your thoughts on them, and let us know if there are any other undervalued dividend stocks that you are considering at this time.
Don't hesitate to give this video a thumbs up. Definitely subscribe to the channel. That was Bert, and this was Lanny from the Dividend Diplomats.
Over and out.